Okay, boys, so in this video, we're going to go over exactly how I track every single one of my trades, and we're going to go through the entire process that I do after I take a win or a loss, how I journal it, all of the little details. We're going to talk about how I actually journal it in my physical journal, how I track it all on Excel, and the entire process I go through to actually improve my trading and learn from my mistakes, and how I actually am making progress towards becoming a consistently profitable trader. So you guys can straight up just copy everything that I do because it is really working for me. And I've also refined my system down over like the past 4 years into like this really highly efficient system where everything is super clean. It's a really efficient process and it's really easy to go over and study my old trades and learn and improve from them, so you guys can just straight up just copy the whole thing. But first things first, this is probably going to be a boring video, so unless you really are wanting to improve your trading and actually become profitable, click off this video right now because it's not for you. This is only for those of you that are super serious about becoming a profitable trader and you don't want any fluff, you don't want any bullshit, because this is the nitty gritty hard work that you have to actually do if you want to succeed. So with that being said, let's get into how I track every single trade. So this is my Excel sheet where I track every single trade. We'll start down here at the bottom first and foremost where it says winning trades and trades not taken, right? So on this sheet, I track all my winning trades, and I also track any trade that I didn't take that I probably should have taken because I either missed it or I made the wrong decision. And then on this sheet, I track all of my losing trades because I like to have them separated out. That way I can just review the losses or I can review the wins separately. So one thing to quickly note is that each of these gray bars basically denotes each week. So I separate each week by a gray bar. So I can see last week I took one winner, and the week before that I took one, and the week before that I took a break even. And it's separated out just so I can see what happened on a week by week basis. In the first column, we obviously have the date because it's super important to track what day you saw what trades. So you can just go back in time and look at that if you need to. And then I track the day that I took the trade. I track the pair. I track whether it was a win, a loss, or a break even. This column is more specific to my strategy, but the LMF essentially stands for liquidity sweep, market structure shift, and a fair value gap. So each of these represents a different point of liquidity that was swept, right? So Asia LMF is when the Asia liquidity gets swept and we have a market structure shift and fair value gap. The London is obviously when the London session gets swept, and the London close is obviously when the London close session gets swept. We also have a New York one, but I don't typically look for a New York LMF, so that one is not really used. Then the next column is what time frame was my entry on, just so obviously I can refer back to it. I can look at it and find exactly my trade. So this whole section is, was it a winner, and where can I find the trade if I want to look back at it. Then we've obviously got the risk to reward. Now my trades are always between a 1 to 2 and a 1 to 5. So it only goes up to that, but it goes up in points just so I can have the exact risk to reward that my trade actually was. Now this column, so the first column represents the higher time frame trend, and the second column represents the direction of the trade I took. And so these need to be the same color. If it looked like this, then I've fucked up, right? Because I've taken a short when I'm actually bullish on price. So as you can see, I pretty much never do that anymore. Not one example I can see on here where I do that. I never trade against the trend. So in that regard, it's always the same, but it's still there to keep me accountable to make sure that I don't make that mistake. The next column after that is what liquidity am I targeting? We've got buy side liquidity, sell side liquidity, equal highs, equal lows, fair value gap, or the consequent encroachment of a large wick, right? So those are the different points of interest that I'll target for my trades. The column after that is what session was this trade taken in? So we've got London open, New York open, London close, an unacceptable time, or London lunch, right? So that's what unacceptable time looks like. I can only trade between London open and New York open. I don't trade outside of that. As you'll see that this trade wasn't taken because it was outside of the session, but I track it anyway because it trade that I think worthy of tracking still goes in here because it's something I can learn from. Then the next column is my entry criteria, and this is just a market structure shift and a fair value gap. Now, on some occasions, I will use an inverse fair value gap. Basically, over the years, all I've done is added extra columns for more details. So this was like a very primitive version of my strategy where it would just be market structure shift, fair value gap for entry. but I keep it in there just because it's always the same entry, but it's still important to track it because then I'm reinforcing that that is exactly what I do every single time. If I didn't track this entry, maybe it will get to the point where I start taking trades based off a different entry, and then that would be inconsistent. So I always track this even though it's exactly the same every time. Now, the next column is what kind of profile are we seeing in the market? So we've got the London manipulation, the London reversal, New York manipulation, New York reversal, London continuation, New York continuation, or New York continuation 2. Now, I definitely don't use all of these, but they're all there in case I ever do. Usually, I'll be looking at the London manipulation because it's kind of the same as the London reversal. I use the New York reversal, the New York continuation, and the New York continuation 2. Never typically the New York manipulation. Sometimes I will see that happen. Now, that's more specific to my strategy and everything involved in that. But yeah, I won't go into that too much. But that column is basically just for what profile am I seeing in the market, because in order for me to enter a trade, I have to see a profile. Now, the next couple columns are all different time frames. Okay, so this one is the weekly time frame. The next one is the daily, then the 4 hour, then the 1 hour, then the 15 minutes, then a pre-screenshot of my trade, and then a post screenshot of my trade. What I mean by pre and post is obviously this is an example of before the trade, and then this is an example of after the trade, right? So I just like to track what it looked like as I would have seen it before I executed, and then after the fact. Now, in the next column, I describe exactly what I saw for why I took this trade. This includes all the technicals that I could actually see playing out for this trade and some minor details like that. For example, internal range to external range move, daily bearish order flow towards the drawn liquidity, either week's already been put in, expecting power of 3. You know, I just put in all of the technicals that I see that align for this trade, and most of these follow exactly the same thing. It's drawn liquidity, institutional order flow, some sort of narrative that gets us towards our target. So it's always the same structure that follows my trading plan, but I like to write exactly what I'm seeing in each trade. So if I ever refer to it in the future, I can see, okay, this is what I was thinking. If I look back and think, what exactly was I seeing here? If I can't make it out, all of them details are right here. Then the next column is essentially anything that I need to write about this trade. So the reason I didn't take this trade is because it fell outside my session. Otherwise, I would have 100% taken this trade because I've been waiting for it all day. So any details about the trade, why I took it, why I didn't take it, how I felt, why I moved my stop loss, everything goes into this column right here. And as you can see, the amount of detail that goes into every single trade is I'll write for ages about all the details, because the more things that you can write about the trade, the more you can go back and find your mistakes. You can find the things you keep repeating. You can find all the minor details, and you can actually find your edge, right? So I literally will just write everything in there that is important about each individual trade that I took, so that in the future, when I refer back to it and I review it, I can see exactly what I was thinking. I can see the mistakes I made. I can see what I need to repeat. I can see what went well. And I essentially just bang that in this column right here. And another thing to note is that when I talk about the technicals, I also write it in a lot of detail. So the more details, the better, guys. I keep saying this, but the more details, the better, because you can actually then go back and you have loads of data to work with to actually improve your trading. This column here with all the highs in it, says that represents the probability that I expect this trade plays out, right? So as you can see, most of these there's a high probability this trade plays out, and I try to only take those. And I also only track high probability trades because those are the ones I want to take. Some of them are medium, which is fine, but most of them, I want them to be high probability, right? And we can obviously got low, medium, high. Ignore these two. That's simply just to fill out the color. And the next column is essentially, was this trade optimal? So purple is obviously, this was great. This was an optimal trade. Good is obviously, yeah, this was a good trade. It wasn't quite optimal, but it was good enough to take. And then okay is, it's pretty much unacceptable. I hate to take okay trades. It has to be either good or great. And then finally, we've got this last column here, which is just a small review. Okay, so I'll basically put in the key takeaway from each trade, if it has one, into this column. So just a small review. After reading all of these notes right here, they go into this review column. And then for this last column right here, this is one that I'm just working on, so it's kind of irrelevant at the moment. Then as you can see, these are kind of denoted by different colors as well. So the purple one is I did take this trade. Then the pink one is I took this trade on paper trading. The orange one is I was distracted, right? So there's a reason. The reason I didn't take this trade is because I wasn't paying attention or I was distracted. The blue one is I placed this trade, but I was missed on my entry. So they all have like their own little category, so I can look back and be like, right? How many times I've been missed? How many times was I not paying attention? I took how many of these on paper trading? Why didn't I take them live? And then as you can see, a lot of recent live trades have actually ended up being break even. So I essentially will fill this out after every single trade, right? And it's just a simple process. It's pretty streamlined. I've basically made it drop down options for all of them. And then obviously these ones require a bit more effort to fill out. And then finally on this left hand side right here, this is where I will kind of show how I've reviewed the trade. So the light yellow is I've reviewed it once, the darker yellow is twice. And the more times I review the trade, the darker the yellow is going to get. So I can see that I've reviewed this trade 5 times, for example. And that's just so I can keep track of how many times have I reviewed this trade. For the losing trades, it's pretty much exactly the same. Now, as you can see, the probabilities of my losing trades are clearly not as good as they could be, and same with the optimal column. There's a couple of OKs in there. And then I also have a review category, so I go over, I obviously do the same process. I review each trade. It falls into a category. So the blue is the trailed stop loss got hit. The green is I had the right bias, but I unfortunately just got stopped out on the trade, or I had the right bias but the wrong entry. The light red is low probability, so all of these light red ones probably could have been avoided had I spotted they were low probability in the time that I was actually looking at the trade. And then the dark reds shouldn't have been taken, right? So for whatever reason, this one, there was no clear liquidity sweep, market structure shift, fair value gap. Same for this one. This one up here was low probability, right? And there's a couple I still need to review, but essentially they have a review category, so I can see exactly just at a quick glance what happened. Essentially, I can just spot easily the mistakes I'm making. That essentially allows me to just identify what I keep doing wrong or what keeps going right in my trades. So I basically fill this out after every single trade. And just to be completely transparent with you, sometimes I will fill half of it out and then wait like 3 days to fill the rest out because it's boring. Like, this is like the dog's work that you don't want to do. Most of the time I'm good, but sometimes I'll fucking leave it till like Saturday and then I'll fill like 3 trades out, because until I've tracked them, I'll leave them on my chart so I still know they're all there. But the best thing to do is obviously just fill it out immediately afterwards, because you've got the freshest mind or whatever, or a couple hours later, so you're not making biased inputs into the sheet. Now, the next thing that I do is each week on a Saturday, I will have a journal entry in my physical journal, right? So I'll basically go over the past week's trading. So one trade, for example, and then let's see if we had any losses. I'll go over these two, and I would write in my actual journal. I write obviously the date. I write, just a weekly review, any key lessons that I need to learn, any things I'm seeing that are on repeat, any ways I can refine my strategy or the mistakes that I've made, and it all goes in here. Okay, so every Saturday, that's exactly what I do. And by the way, guys, this is a lot of detail. Like, I put all the details in here, so every page is pretty much filled out, right? And anything that is major, that is standing out, like I'm seeing when I review my tracking sheet, anything I see on repeat goes in here, because this is like the book of wisdom when it comes to trading. And I've got another one somewhere which is completely filled out. It's the exact same as this. This is my second one. And so all the key takeaways, the key lessons, everything goes in there. So essentially, I'm constantly going over the things that I need to improve so they stay in my mind, and I make sure not to repeat those lessons. And some more things obviously that go in here is a backtesting notes, for example, things like get back into routine, weekly reviews, mistakes, and also some words of encouragement as well that I write for myself as well, just to make sure that it's not all negative. There's positive stuff in there, and kind of have a hopeful outlook on this whole journey. So with all that being said so far, for actually tracking all my trades and all the details and everything I need to know, the journaling and stuff, I also go back and I reread all of it, right? Because there's no point tracking it if you're not going to go back and you're not going to go and find your mistakes, you're not going to learn from your lessons, you're not going to reinforce the positive behavior and get rid of the negative behavior. So I reread all of it. I make an effort. I write it down in my to-do list. It's reread 5 pages of the journal, go over 5 trades. And in doing that, I have my notebook as well. Essentially, I will go over anything to do with trading and I'll write it in here. Here's a bunch of trades tracked right here, which is I'll go over my Excel sheet and I'll rewrite down notes that are important. I'll go over my missed winning trades, so you can see all of those there. And I just write it in a bunch of detail and just see if I've missed anything in previous reviews. And basically, I just try and put as much detail as possible in here, and then I also reread this as well. Now this one is more so just me writing things down, right? It's not necessarily something that is super clean, or like, I just kind of jot things down. Just a place for me to basically just brain dump everything into that, and then anything essential from that goes in here. And then from there, everything goes into here, right? So basically, this is my trading plan. And obviously you can have a quick look at it if you want, like pause it or whatever. But at the same time, you're not really going to know what's going on unless I show you exactly how. But this is my trading plan, all right? So there's a lot of details in here. Feel free to read it, look over it. But over the years, I basically refined it into this exact trading plan right here. And anything that is a reoccurring theme over and over and over again, and I go back through my data and think, right, if I need to create a rule around this, and I just see it happening, and I know that this is what's going to result in building a bit more of an edge, it goes into here essentially. So any rule, how I manage my risk, when not to trade, and then also I jot some things in here about reading before trading. So this is just like a reminders of your mindset going into the charts and actually trading. And the amount of, I'm not gonna lie guys, the amount of value that is right here alone is crazy. Like this is years and years and years of condensed value. So literally just screenshot it if you want to. Like honestly, at this point, I don't care. I'm just giving you guys as much value as possible, because most people out there that are selling you the dream of trading will never go into this kind of detail of how meticulous their trading really is, right? Most people are out there like, oh, you just see this target taken and do this, right? Just know that most of those guys don't know what the fuck they're doing, right? And the reality of trading, this is the raw reality of trading, having a plan, journaling, tracking, doing the dog's work. And obviously, eventually you don't have to do this. Like, you'll probably want to do it just to keep on top of the positive habits. But at a certain point, you'll probably be good enough to know where this is ingrained in your brain already. But I would always encourage you to track all of your trades, even as you get better and better, just because you don't want to lose touch with your trading and start to think that you're better than you are. You should really remain a perpetual student of the markets and constantly be trying to refine and improve, or at least make sure that you're tracking your data so you know what's going wrong if something ever does. So that's essentially my process for tracking all my trades and journaling and reviewing my journal, and then how it ends up in my plan eventually as well. But obviously there's one more thing that I want to go over, and that's FX replay. And essentially I use FX replay to simply just get reps in and practice, right? If you want to be the best footballer ever, you train more than you actually play. That goes for anything, right? If you want to be great at something, you practice more than you actually play. And so FX replay is basically what I use to do that. So this is just my backtesting software. You guys probably already heard of it. And as you can see right now, I'm just going over some testing. I want to do 10 years of data or 8 years of data on this strategy right now. But it shows you basically loads of details about your strategy. So for example, you can see my equity curve here, total P&L, win rate, total trades. And then this part is what I actually find really interesting. So you can see your average win and your average loss, and then you combine that with your win rate, and you go put that in like an equity calculator, and then you can put in the amount of trades you're on, and then essentially you can see where are you at in comparison to where you should be. And that really helps you get into the right mindset. So as you can see right here, if I put in my average profit on winning trades is 2.2, my average loss on losing trades is 0.77, over 40 trades on a £100,000 account, the total net profit average is 18,576 over 100 trials. So when I come back and I look at my data and I see it right, I'm at 17,189 in total P&L. I am exactly within the range where I should be according to my data. And so if I'm on a bit of a losing streak, that can completely reset me mentally back into the right state to know I'm on track, I'm exactly where I'm supposed to be. And that basically allows you to come back to equilibrium. If you're getting carried away because you've won like 5 in a row or you've lost like 6 in a row, it can basically really help you mentally to reset, to know your stats, to be able to put them in an equity calculator and actually know that you're exactly where you're supposed to be. Obviously, it also shows you how well you're doing on a day-by-day basis. So as you can see on Monday, my win rate's pretty low. Same with Wednesday as well. But then Tuesday and Friday is really high. I haven't got enough data on this yet to be able to say definitively that I'm not going to trade that day anymore. But after like 5 years of data, and it showed me that my Monday is like really low win rate, I'll just cut Mondays out, because then I know that's going to increase my edge. Then you can see right here, a very visual representation of your trading. So this is just, it really is good positive reinforcement to see that you can return positive returns every month on demo, because then you know that you can do it live as well. But the only problem with live is that your emotions is probably a bit more involved, and you have to be a lot more patient waiting for great setups and allowing them to play out without messing with them at all. Because with FX replay, you can just skip through quickly, which saves you a lot of time. But at the same time, it's not exactly realistic, because you are waiting around a lot in live trading, way more compared to backtesting. But if you can perform on backtesting, you can perform on live. You just need to obviously, one, have a lot of control over your emotions, and two, be super patient, which both come with practice. But if you can prove yourself profitable on backtesting, you can transfer it to live. You just have to develop that. That's where most traders will struggle emotionally and with their discipline and patience, etc. But that just comes with lots of journaling and lots of practice. Then obviously you can see that by performance, by calendar year, you can see that you win your wins, your losses each month. So it's actually really, really cool that you can get all this data and see it like this. Now, the only thing I'd say is that you probably can't backtest more than 2 pairs at once, because it's going to get really overwhelming to look at 4 different like screens or even more, right? So I basically just backtest the correlated assets. So we got gold and silver here. I do 2 at a time. So all those results that you just saw was essentially 2 pairs. On real live trading, I trade like 8 to 10 pairs, simply because it's not like I'm finding a trade on each one every single day. There'll be like 2 or 3 pairs a week that are looking really nice that I can trade. So having more pairs allows me to find more opportunities without getting overwhelmed with trying to trade all of them every day. I basically will just filter out the best ones and I'll just trade those. So although I don't have all the data for that right here, I know that it'll be transfer all assets. They basically trade exactly the same using the concepts that I trade, which is ICT, by the way. So realistically, at this point, my profit probably would be higher because I'm trading more pairs. So there'd be more opportunities. Let's not get into that too much. But yeah, I love FX Replay. It's really helped me build my confidence in the charts, actually getting loads and loads of experience, getting the data, understanding my edge, understanding my data, understanding the analytics, and knowing that that's transferable to live has really, really boosted my confidence a lot. And to be honest with you, if you don't have an edge yet, like, this is where I would spend most of my time. You can't cheat yourself out of learning through this. Say, for example, you just went back and you just used the replay feature on TradingView, but you already saw price action. You can lie and say, well, yeah, I would have taken that, or I wouldn't have taken that. When it comes to FX Replay, you can't actually do that. Like, you either are in the trade or you're not. You can't say, well, I would have, well, I could have, and lie to yourself. So that's why I also really like it as well, because it simulates realistic trading. So if you want to use FX Replay, which I do, I pay for it myself. I pay for it out of my own pocket. I use it all the time, and I wouldn't suggest anything that I don't actually use. But click the affiliate link below and use Jake G at checkout, and you'll get 15% off your subscription. So go and use that. But that is essentially everything I do to improve my trading, other than turning up every single day to be on the charts and to be present. I track every single trade in extreme detail. I journal, I review all of that, and I also turn up and I backtest for an hour or so a day. Anything past that, my brain gets absolutely fried and I just can't focus and start making bad decisions, because trading is really about optimal decision making rather than it is like hustling. I don't believe that you can hustle at trading. Maybe when you're learning, but like after a while, I think that to trade at the highest level, you need to actually operate at the highest level. So that means if you do it too much, you're just going to burn out. You want to optimize your decision making. So yeah, that's essentially everything that I do to improve my trading. And I'm starting to see a lot of results. As you can see in the backtesting, the data is there. I want to gather way more data. I also have hundreds and hundreds of hours of live experience and handling my emotions and all of this and all of that. So it's really just a matter of time. If not, I'm already there when it comes to actually being a consistently profitable trader, because I'm on phase 2 of my funding challenge. So I passed with 10% live. I'm in a bit of drawdown on the phase 2 right now, but I have absolutely no doubt that I'll be able to get out of that. It's just going to take a bit of time. And so as a semi-profitable trader, I would argue this is everything that I do to actually improve. I'm not giving you any bullshit. I'm not telling you it's easy. You will have to do the dog's work, but it will be worth it if you really, really want this to happen. Because once you have the skill, you can make a couple of percentage a month on like 1 million funded, and you're making anywhere between like 10 to 50K a month if you have like 1 million funded, which I really don't think is hard to get for one person. And then once you have the skill, it's with you forever. Once you learn the skill to make 2 to 5% a month, which is completely reasonable, none of this 10, 15, 20% bullshit. Maybe you'll get that in 1 month and then have like a dry streak for like 5 months. 2 to 5% a month, right? I think is completely reasonable. Yes, you'll have some drawdown months. Yes, you'll have some break-even months. But imagine you can just return 10% in a year on 1 million funding. That's 100K right there. So if you really want to be able to make that kind of money literally just from your computer for a couple hours a day, I highly recommend that you just lock in and you do the dog's work and you get it done and you learn. So you have this skill that is with you forever, because time is going to pass anyway. So you might as well put it to good use and actually learn a skill that can return you crazy money, and you can start living a life you actually want to live. Like, not even any bullshit, right? But most people don't want to do this. Like, they don't want it bad enough. So anyway, enough rambling. Hopefully you enjoyed that video. You took some value away from it. And my final word of advice is turn up every single day, do the work that needs to be done, and don't put a time limit on your success. Don't try and time your success. Just turn up and do the shit every single day and try and improve every single day. And eventually it will all start working out for you. As always, guys, join the Telegram. If you've got any questions, go and join the Telegram and then message me on Telegram if you want to talk to me directly. I will reply to you on Telegram. Use the affiliate link in the description for FX Replay as well, using code JAKEG at checkout for 15% off, and hit the subscribe button. I appreciate you very much if you tuned into this. If you watched the entire thing, there is a high chance that you are going to be a very successful trader because you watched the most boring video ever. Thank you very much for watching, and I'll see you in the next video. Peace.